Hello again, this is Charlie Belfontaine, and you're listening to WCPT AM 820 early on a Saturday. Exactly.
More like change the channel and then
and it only gets better from there.
Forget the number 820. Come on. We got an exciting, hard-hitting real estate talk. Come on.
That's true, and that is going to happen like there. First of all, I want to... We're missing Steve Davis from the Kamar Group again, and I want to give him a special shout out. And I hope that everything gets healthier for him and his family, and he comes back to us soon. And in the studio with me, we got Patrick Loftus, who's the most exciting person in the world. You just heard his voice. So, Patrick, give us the synopsis on who you are and why you're special.
Completely unrelated, Steve. I do hope you get that extension. That's all I'd say about that. I'm Patrick Loftus. I am a real estate lawyer, not a stand-up comedian. Find me on social media, on Instagram, Loftus_law, because that's easy to remember. On TikTok, at Loftus Law. And I also post all that stuff on YouTube Shorts. So come subscribe to my YouTube channel. And if you are the biggest nerd, you're going to find me on LinkedIn, Patrick Loftus, the super duper serious real estate lawyer.
No, and in all due seriousness, you are probably one of the smartest and most dedicated people in real estate that I know, and I truly respect that. And
the bar is very low.
The bar is not low. And and same thing with everybody else who comes and joins us on these things here. What you do, and then offering, I know you don't give free legal advice, but there's always going to be some questions. We answer a lot of them here. And if anybody ever does have any questions about stuff, please feel free to join us and let us know what they are. We will get them answered for you.
I will give free illegal advice.
Illegal advice. Yes. I love it. Joey, give us a scoop, please.
I would like to offer some legal advice.
But I would report you and you'd be in trouble.
I'd be in trouble. I'd get disbarred. I don't know how that works. Joey Matthews, the VA Loan Nerd, NMLS 1330694. You can find me on all the social medias as at the VA Loan Nerd. You can swing by my website, thevaloannerd.com. You can call or text me at 630-235-2405. And in the markets, we are just seeing a happy little 3-day window of selling off in the long-dated treasuries and mortgage-backed securities. So we are currently trading at a low we haven't seen since April 11th, right? And when we trade at a low, that means rates are higher. But we're still in a very narrow window that we've been in for 6 months now. Gosh, 9 months now. We'll just call it relatively flat over the last 9 months with the same ceiling and floor that we've been working with. The 10-year Treasury is at a 4.533% yield right now. Let's see what the high for the year is. Where you at? 10-year Treasury? There you are. So we are trading well. We're still well below the high. The high that we saw on January 13th was at a 4.8, and we are at a 4.583 yield. So I know that's a lot of crap that you really don't care to hear. Doesn't really matter in your eyes. At the end of the day, it's a good thing because it is keeping prices relatively stable for home values. Because, again, I'll say it till I'm blue in the face. You don't want to be the guy who's sitting on the sideline when rates come down and all of a sudden you're like, oh, my God, I can't find a house that's in my price range anymore.
You know, for those of you who are still here, all right, because Joey did his best to get rid of, the people who are casuals. For those of you who are still here, now we're going to get to the good stuff. Now, Joey, what it sounds to me is that mortgage rates are one of the few things in our economy that's been fairly stable, which I sort of like to see, even though they're higher than, what we all want. I mean, we all want a lot. So for what it's worth, I mean, when you have more stability, you can at least formulate a plan. Now, because there's so much instability elsewhere in the economy, I think that's got people kind of apprehensive about making big decisions. But that said, I do want to ask you real quick about the news about our national debt being downgraded in terms of
by Moody's.
the
I mean,
quality.
they're the last ones to the game.
So what I mean, what does that do? I mean, I'm vaguely aware that it will increase the cost that the National Treasury has to pay when it's repaying bonds that it issues going forward, and that will become a more difficult situation as time progresses, because interest is one of those things. But do you see that affecting mortgage rates? Do you see that affecting the economy in a lot more in a larger sense? I mean, what are your thoughts about that?
I really don't, because Moody's is the last ones to report the downgrade. I mean, the S&P, the Standards and Poor, the Fitch, they downgraded back in 2011 and 2023, right? Moody's waited years to downgrade to so they're so far behind in the downgrade. It really, the only thing that it did was it created a little panic sell-off that we were immediately recovered from. So the only other thing that's happening now is people are reanalyzing U.S. debt a little bit, nothing crazy, because now it's all three of these credit ratings are lower than they were 15 years ago. But the Moody's is just the last player into the game in that situation, so I'm not terribly worried about it. There was a little panic sell-off, but it was immediately recovered by the end of the day. That happened on Monday, and then the last 3 days it's just been more panic than anything. It's recoverable though. It's nothing that's going to be a game changer.
I got a question for you, Joey. Is interest rates, are they a nationwide thing, or is that fluctuate by local markets?
There's very tiny adjustments that investors will put into certain areas that they may or may not want to invest in. But regardless of those, so essentially those investors will price themselves out of certain markets, but there's other investors that are going to cut up or take up the slack. So you're not really going to see a major change in rate based on different areas. Different housing types will have different rates. Condos, you're going to have quote unquote more risk in a condo, because you're also looking at the association's health. Manufactured homes, there's rate adjustments on manufactured homes. So yeah, it's just the riskier the product, or the riskier the security, then they update cost for that security.
I would think that trying to localize where you are willing to and where you are not willing to make loans, regardless of how you do it. I mean, you go, I don't make loans in these particular areas. That would be, I think, pretty on its nose.
You get a slap on the wrist pretty good from that one.
But they'll use proxies for it, right? Like, well, these area codes, or these, however they are going to try to characterize it to avoid making loans. Yeah, I guess my point is that those lenders, boy, they are really walking a tightrope to avoid a fair housing lawsuit if they are trying to stay out of certain areas, if you will.
Well, I guess the reason why I brought this up was, I talked with a bunch of other home inspectors across the country, and the guys in Florida and quite frankly most of the country, they're slow. Their market is slow. People are saying that house prices are dropping drastically, and there's just no buyers out there for when it comes to this stuff. It's a little bit frightening. Then when you look at New York, California, Chicago, man, we're just stupidly hot here. It's like everybody wants to come into our area. And that's what I was wondering, if Florida or something like that goes back down to, well, we're going to lower the rates because, not as many buyers are buying there. We want to boost up that area. That's our gas pedal and brake pedal. And you're shaking your head no, Patrick.
The lenders ain't going to prop that up.
They're not.
That's
okay.
That's on the sellers. I mean, if lenders were...
Go into more detail. What do you mean sellers? Or what do you mean it's on them?
I mean, look, the sellers own the thing, right? So
the house, yeah.
If it is not fetching a certain price, it's not up to the lender to be like, well, shoot, I gotta bail you out, seller, by lowering my interest rate so you can get your price. They're just going to go, look, your property is worth what it's worth. We'll lend based on that.
But the mortgage guys are going to also benefit or lose, and Joey chime in on this, because if you're not making mortgages because people aren't buying, you're not making money.
Yeah, but you're also not taking on the risk of that home being wiped away by a hurricane. I mean, so and for me personally, I think more Florida is going to be a very reactive market. So if we see a slow hurricane season, if we see not a ton of storms, right, we're going to see a lot of people flow back into the market. I know I got 2 contracts in Southwest Florida yesterday, 3 contracts over the last 3 days, and it's a market that it's very mercurial. I mean, people are reactive. After Ian happened, God, was that 3 years ago now? 4 years ago? I had a lot of buyers that I helped buy before Ian go back to wherever they previously lived. And then 10 months later, they were under contract to buy in Southwest Florida again
Really?
because yeah, they had another slow season. They're like, okay, maybe this is a blip on the radar. Yeah, it was our nasty hurricane. We lived through it. We're good. And then they go right back and buy again. It's a very reactive market. Yeah, it will
Florida,
come back.
Florida has been a boom and bust kind of market since they drained the swamp down there.
California's the same way. They've had some big swings in that state.
Not like I mean, Florida is one. It's one of one as far as I'm aware. I mean, California. I mean, it's hard to talk about California as one monolith, right? I mean, it's huge. So there are parts. I mean, shoot, you could go to Los Angeles and in the more desirable, in like the sort of middle desirable areas, it's still incredibly expensive because of supply and demand. Whereas you go to a place like Stockton or Bakersfield, and it's a completely different story entirely. So it's hard to talk about one state like that. I mean, even Florida. The coast areas, I think, is what Joey's talking about in terms of the extreme booms and busts. The farther inland you go, the less direct effects they'll have from these storms, and the more comfortable people will be, buying and living in places. I've read some things online where whereas Fort Myers and Southwest Florida in particular, because they're really the most recent area of Florida to get hammered like that. I mean, they are struggling because they're probably in a lot of ways still recovering from it. Whereas if you go to like Gainesville or Jacksonville, where they haven't experienced that recently, I mean, let's face it. I mean, if you like warm weather, Florida's a great spot to plant yourself. And there's a lot of things about Florida in general that appeal to people. No state income tax. Bless you.
It's warm.
Well, I mean, depending on who you are, the one or both of those will appeal to you. I personally don't really want to go anywhere near that place from about June until the middle of September because I'm an inside cat. I live in Chicago, so but it's like. I think ultimately part of what your question is, and correct me if I'm wrong, is like, how do we adjust for some of these things for the different kinds of markets? Because the U.S. is not one real estate market. The U.S. is thousands and thousands of real estate markets. We're hot here. Southwest Florida is not hot. I mean, Joey, in a locality where things are when the market's a little softer, I mean, are they going to offer more incentives, kind of like what builders do? Are sellers apt to sort of look into crediting people for like a rate buy down or things of this nature?
Absolutely, and I actually encourage a lot of list agents to do that because at the end of the day, a day if you're looking to put 5% down on a $500,000 versus $400,000, I mean that's only a $5,000 change in what your down payment is, right? But that's a terrible example because you're not going to get $100,000 worth of credit, right? But the difference in down payment between $490 and $500, I mean, $500, right? Or you get a $5K credit, buy your rate down, and now your payment is $150 a month less, $100 a month less. After 5 months, you already recouped what that difference in down payment. So I am very much always on board with seller credits. Use it for closing costs. Use it for buying down your rate. It's a way to keep a lower payment than just going after the actual price of the home.
So as a
And
seller,
values are protected.
there are some levers you can perhaps pull to entice a buyer into making to make your property more attractive to a buyer. The mortgage, the monthly mortgage payment. There's a lot of things you can do to affect it and make it go down, make it go up, depending on what your situation is and how much money that you can kind of shift from one spot to another through credits or through, if it's a situation where you can get some gift funds on the buyer side or, whatever it is. But it sounds to me like it's something where even as a seller, you might want to talk to a mortgage broker, like you're saying, Joey, and just say, what can I do to make your job easier for someone that's trying to buy my place?
That's actually a really good question.
That's why I love list agents that reach out, or my agents that are listing places and they reach out and we have that conversation. And so, yeah, seller credits are a huge help for buyers right now.
I mean, something that comes to my mind is insurance, right? We're like here in the Chicagoland area, we're used to paying roughly $1,500 a year. But I'm hearing people in Florida are paying $1,500 a month coming in there. That's got to be affecting what they can borrow, doesn't it?
If your insurance
my
is
homeowner's
higher,
insurance is
$1,500
$1,500 a year.
Absolutely. And I mean, anytime that I'm working on these things in Florida, I'm going to start at assuming insurance is going to be $5,000, $6,000 a year.
Oh, I thought it was more than that.
It depends on the house.
Yeah,
right? So
yeah.
Charlie's friends buy $3 million houses. My friends buy $300,000 houses.
Yeah, I mean,
I like my friends better than your friends.
You're gross. Let's make sure that we, if we're going to try to be accurate about this, insurance. If you're going to use that number $1,500 a year versus $1,500 a month, we're really using that as a placeholder number because there are so many different things that go into what your policy is, like the limits, the different things that you're getting covered. Are you getting flood insurance or whatever it is? Not all insurance is created equal.
What do you mean? They're not all commodities?
Not at all. I mean, look. All I can tell you is someone who has dealt with, on the lawyer side, right? I've handled many different kinds of cases that involved insurance, and I've got a pretty solid notion of which ones are decent and which ones I would. I'm not going to name names here. I mean,
I will.
Generally speaking. I would avoid, any insurance that Shaq is trying to get you to buy, or anyone with a military rank. No offense, Joey. But if if they're advertising, if they sponsor a bowl game, there's a good chance they're decent.
Well, no, these are things that have just happened recently, in our business, and I've been trying to help people with them, And it seems like I'm getting the most complaints from Travelers Insurance, all right? And this is not me criticizing them, and these are legitimate things that have happened, and it happens a lot with that particular one. I'm hearing, things on Citizens Insurance as well. And I get it that they're going to be the cheapest, all right? And a lot of my clients that are getting insurance, they're using an insurance broker, and they think that everything is a commodity. They go ahead, they buy the house, then about 2-3 months later, they get a letter or an email saying, hey, we're canceling your insurance in 45 days unless you put a new roof on there. All right. And what did we do? We told them the roof was 15 years old. There's, some algae stains on it. There's some lost granules. It's not leaking. You probably got another 5 years out of it. But I don't know what insurance they're going with. I don't know any of these things. And this comes into a big headache. And I had one client pay $32,000 to put a new roof on.
Now they got a new roof.
It should have cost them $12,000. All right. They ended up paying 3 times the value of that roof because they didn't have the luxury of time.
Well, that was silly. I mean,
I agree, it was silly. That was a mistake that they made.
Yeah,
But education,
call another insurance company.
call me.
It should be said that this kind of thing it will evolve over time. So you may be hearing a lot about these kinds of things from a particular insurance company now, and then next year it'll be another insurance company, and a lot of it has to do with them either trying to mitigate a particular area of insurance that they're getting a lot of claims on and need to kind of stop the bleeding there. But once they perceive a more stable environment, they're going to want to get more competitive, and so they're going to be more. They're gonna be better. I mean, as long as they're not a substandard carrier, which is those are going to be the lowest priced ones. But
I wouldn't even know how to recognize a substandard carrier.
Well, I mean, the one way is the price is just a lot lower. It's like, how's that? It's because you're in a sense you're getting insurance in name alone. Anything that's not like right down Broadway in terms of an obvious claim that should get paid is going to be a fight if you ever see a dime from them, because they know if there's something that's at all that they can stink their claws into in terms of a denial, what are you going to do about it? You're already
good point.
You already don't have the resources to buy proper insurance. You're certainly not going to have the resources to pay for a lawyer to take them to court to get a declaratory action on that $10,000 claim that you wanted to pay. So they've kind of got you.
And the two biggest powerhouses when it comes to homeowners insurance is going to be State Farm and Progressive. All right. And I really don't know much about Progressive. I haven't had any interactions with them, but I do have a lot of interactions with State Farm. And even with them, they're doing a lot of, and they're catching this on the policies. And I'm trying to make my clients aware of it. And I do have a State Farm agent trying to put an educational video together for us and our clients so that we could share this information. But they are getting aggressive with, denying renewal denials and even giving original insurance to older roofs, sidewalks that are uneven. So those are trip hazards, ivy growing on the buildings. Yeah, those are all things that are coming back, and they're just fix this, remove it, or we're canceling your insurance.
I mean, they've got people called actuaries that work for them, and if you ever meet someone and you ask them what they do for a living, and they say actuary, just know that that's one of the smartest people you will run into.
I would agree. Yeah.
It's the closest thing you can really get to someone that can predict the future. That's how well they're able to work with numbers and data.
When I was the president of our pension board, we had to work closely with the actuaries.
Yeah.
And that's what we decided, how much money does the village have to put in versus not put in, that comes in there. Joe, you were going to say something.
No, I know that our Cicero actuary was working off incredibly old tables, and yeah, it's something that we're very familiar with in the pension systems is actuarial calculations, and yeah, they're very smart. That's all I was going to say.
That's who is behind some of those decisions that ultimately the brainiac. MBAs that actually make the business decisions. Love those guys. I really want to, if I had unlimited time and I didn't have to worry about making a living, I would go audit an MBA program just to find out what horrible things are they teaching these people that go out and become titans of business. Because I would just really love to know what twisted their minds in a way to be so just geared toward profit motives and shareholder value as opposed to I don't know, people.
And I also think it's important to say that the big powerhouses everybody else is going to follow them. So if this is what Progressive and State Farm are going to be doing, well, then all the smaller insurance companies that don't have as much, they're going to probably be doing the same thing. I see that in most business. If somebody's raising their prices or whatever, let's do the same thing. so that we can make more money or whatever it is. They know something that I don't know.
I work in a business that is 99.9% a copycat business. You know,
So do I.
It's either I'm either copying a form I've previously used, or I'm copying a form that I got from someone else. You know, there are only so many ways to evaluate a particular form contract. There are only so many. Yeah, the world of issues to spot is pretty finite, at least in real estate. You know, you get too clever and you'll just confuse people, which is what I've found. The more outside the box I think, the more people go, well, that's not how we do things. And I'm like, okay, never mind. So you know, I don't blame any business who then, you know, it decides that well, they're doing X, Y, and Z, and it looks like it's really successful. So, yeah, not only am I going to do X, Y, and Z, but here's a couple of innovations I can add to it, and all of a sudden now I might have the competitive advantage. And that's the nature of competition in general. Is that if you are not putting energy into the project, into the process, it means that if you're not going up, you are going down. There is no tread water. You know, when your car is in cruise control, it's still putting power into the wheels. So you know, understand if you are going to try to tread water, you've got to put a certain amount of power into the project, into the process. So if you are, like, you know, at the top of your game at some point, just realize that you know, that's a brief moment of, you know, have a glass of champagne and then get back to it. So
It's funny you say that. We were talking before we started recording about video games, and when I was younger, it was Pong, and I thought I was hip, you know, because I had my Atari set with my single joystick controller. And I must have bought about 20 different games, but they were really all the same thing. It was all Pong, you know, that came in there until Mario Brothers came out. And yeah, you guys are laughing at me.
No, we had a 2600 when I was a kid. I mean, it was, you're right though. It's like Atari, they blew it. They put out 1,000 games. They got way too high on their own supply, if you will, and they burned people out. Joey's laughing.
He is.
Yeah, they burned people out on all these. I mean, the famous example is the ET game that they had to have out by a certain time. It was so undercooked that I remember I had that game. You couldn't figure out what you're supposed to do. It was just such a pointless game. There were so many, cartridges that they were unable to shift. That there's famously a landfill somewhere in New Mexico with just thousands upon thousands of unsold copies of the ET 2600.
I'm on my way.
Game.
Where?
In New Mexico. So you know,
that's far.
Yeah, well, you know, it's
my
also,
electric vehicle isn't going to make it there on a single charge.
You will need multiple charges for that.
All right.
But then, you know, Nintendo came around and they innovated. And I mean, I don't think anyone who played games on the 2600 didn't see Super Mario Brothers and have their mind blown. I remember 8-year-old me saw Super Mario Brothers and was just like, my goodness gracious, this is something like out of, I don't know, the future. It was crazy.
I still can't figure it out how to do a skid turn and throw a green shell at people, you know, but this is supposed to be about real estate, not
Who cares
doing
about real
games.
estate? It's boring.
I know, video games is so much better.
You told people literally at the beginning of the show that this is going to be boring. So I'm doing whatever I can to talk about things that are less boring.
And I love you for that. So I was messing around on Reddit this morning, and somebody posted up there that, you know, they're in the middle of buying a home, and they're waiting, you know, to get to the closing table or whatever, and they just received a letter of collection notice from a medical bill, and they're like, am I losing the house? Is this going to ruin everything? You know, Joey, what is the deal with stuff like that? And let me see if I gave them good advice or not.
All right, the medical collection popping up, or a collection popping up. So, one, I will say that it is highly unlikely that they had reported the collection. It's likely a collection agency who just received the collection. I would get more information there first, and pretending I'm not a mortgage guy right now because I don't want to get in trouble. But yeah, I know,
Sorry,
dude.
these
like,
are legitimate concerns that somebody is having.
You know this is being recorded, right?
Yeah, I know, dude. Like, here's the thing. Once I know it's there, like I have to consider the collection. Like, I have to consider the collection. So if it happens to you, don't call me to let me know, right?
Oh, I
Because
did give
don't-
them bad advice.
Hypothetically, if it were to happen to somebody who is working with a different mortgage broker, not Joey Matthews, the VA loan nerd on all socials, hypothetically, if you wanted to play games and perhaps commit mortgage fraud, but still get your mortgage
That's where I'm going.
and never get in trouble, maybe that letter got lost in the mail. I'm just saying, maybe hypothetically could have happened.
Why not
I
just
don't
pay it
know.
off and be upfront with it?
Not everyone is Moneybags Bellefontaine that can just be like, gee whiz, let me just go under the mattress in my guest bedroom and pull out the 30 grand that they asked me to collect.
I should jump in and clarify. It was a $50 bill that they didn't know about.
Oh yeah,
they didn't get any notice or anything else like that. And my advice was pay it, and let the mortgage guy know. Let him know that you paid it off and everything else. To me, I don't know. Maybe I'm just a nerd. All right. I always thought it was never ever the mistake or the problem. It was always the cover up that gets people in trouble. It was always lying about it or keeping a secret. And I'd rather be forthright.
No.
And you're telling me no.
Nixon here, is going to end up resigning. Whereas, what was the guy from Idaho with the toe tapping deal? And then he just kind of let things blow over, and he was still senator for a while after that. Anyways, Google those. Everyone should know what Nixon is, but the Idaho senator. Anyways, I don't want to get into the details because I could get myself in naughty words, hot water. But look, if it's a $50 thing, just sort it out. It's not worth worrying about it. I mean, this next bit isn't necessarily going to be useful for someone who's in the process of applying for a loan. But one thing you can do under the Fair Debt Collection Practices Act is so you get a letter like that, you send them a letter asking for them to provide proof of the debt, and they have 30 days to respond. So, I mean, maybe that is a way to kind of deflect until after closing. You go, yeah, they sent me this letter. I don't agree that I owe it, and I asked them to provide proof, and so I didn't think, at least maybe you have some plausible deniability if in the weird scenario where someone comes back after closing and is like, you didn't disclose this $50 of debt. I mean, a $50 debt is probably not going to throw your debt to income ratio so out of whack that all of a sudden you don't qualify. But if it was something larger, I don't know, just a thought as far as how do people deal with debts. I mean, with debts from a collection agency, I mean, half the time or more, they all they did was buy a spreadsheet off of someone, right. And then you ask them to provide proof of the debt, and they just don't have it. They're just counting on a certain percentage of people to just cut them a check, or if they sue, to be able to get through and get a judgment and then garnish. And it's a numbers game for them in terms of if you challenge it at all, a lot of those folks will just they'll just chuck that file in the garbage. It's I wouldn't necessarily always just assume, well, yeah, I just must owe that money if someone sends you an odd letter, especially if it's not the original creditor.
That's interesting. Joey?
Yeah, so if you have a $50 collection, I always say just cover your butt and reach out to the collection agency. Let them know that you will pay it as long as they delete the account. That way you don't have an effect on your credit, and it doesn't show as a paid collection. Never pay a collection unless they're going to delete the account, because once you pay it, then you got another 7 years of it trailing on your credit report. All right, so settle collections for deletion. Otherwise, they can go pound sand.
That's really interesting. Say that one more time, because I've never heard of that before.
Settle collections for deletion. Otherwise, they can go pound sand.
And you can do that, huh?
Absolutely, you can do that. I've seen it happen where a score will go up 100 points because we got it settled for deletion, deleting the account from ever having existed. And some creditors are going to give you a hard time and say, no, we won't do that. Tell them to pound sand. I'm just don't pay it off. Eventually, you're going to have to charge it off, and it's going to report on your credit report for 7 years. The same way a paid collection would report on your credit report for 7 years, right? It's going to have the exact same effect.
But aren't you going to see that, Joey? Because don't you
correct.
do?
Whether if you pay the collection or you just have them charge it off down the road, we're going to see either of those for the 7 years, and we're going to keep seeing it. So a paid collection is just as bad as a collection.
So is this guy? Are they going to lose their home?
I don't know the situation. I don't have it's not my client. I don't know if the collection agency just got the file and said, "Hey, we have this file." I don't know if they've reported it to the collection to the bureaus yet. But on a $50 collection, say yes, I'll pay this, but I need the account deleted.
That sounds fair.
Yeah, I mean, fair.
I learned something new.
If only the world were so fair. It reminds me of when I was applying.
They have more money than you do. Let them charge it off. Sorry.
I mean, I don't disagree. When I was applying to the Illinois bar to become a licensed attorney, it's the one moment in time when they get to check up on you to see if you're, if there's something wrong with you. Otherwise, once you're past, any number of traumatic brain injuries can happen to you, and it doesn't matter. You're still a lawyer. But at that time, you've got to kind of, you got to pass the test, so to speak, the character and fitness test. And when they pulled my credit, it turned out I owed like an $82, bill for some like physical therapy I got like 4 years before, and I ended up having to pay it just to, I was like, I don't know this money because they were supposed to charge insurance, but at that point, it's like, I just want to be admitted to the bar, and $82, I'm not going to go down, however many rabbit holes I need in order to sort that problem out.
Some fights are not worth fighting.
Yeah, so I can just make a phone call, give them my credit card number, and have a receipt sent to me, and problem solved as far as getting past that. There were a couple more hurdles to get past, but the long and short of it was I talked to someone on their committee, and you're like, well, yeah, looks like pretty run-of-the-mill mischief that you got up to when you were younger, and nothing to see here. And so that was it, and I became a lawyer. $82.
$82. Yeah, you. I actually had a parking ticket one time in the city of Chicago, and I didn't want to pay it and stuff. And then I started working for the city colleges of Chicago. They put me on as an employee, and sure enough, they do a background check on you, and they saw those tickets there, and they're like, yeah, you're going to have to pay this parking ticket before we, employ you and stuff like that. I'm like, oh, okay, well, done. And I paid it right away.
The parking ticket wasn't your fault, Charlie.
It's never my fault. No.
If that meter maid hadn't been there at just right that time.
That I don't know about.
Oh.
Yeah, I was there over, and no, I was guilty as can be. I was just a young jerk, and that's all there was to it. But now I'm an old jerk.
This is where you've got deny. If being alive in 2025 has taught me anything, is that even if you are caught red-handed, just deny, and get louder and louder and louder and louder.
Bad advice. No, absolutely not. It's just fix the problem and move on. It's okay to make mistakes and stuff like that. Just fix it and move on.
I don't make mistakes. I just get louder.
But let me ask you something about, things that are happening during this whole process. I mean, there's a time frame. What I guess that is important. What is the average time frame from when somebody buys or signs in a contract to buy a house till they get the keys? What is that time frame?
Probably about a month.
A month. That's average.
Give or take.
Right? And one of you two just had this happen to you where the person buying the home passed away during that process.
The person selling the home did.
Selling the home did.
Yeah.
Can you share that, or is that private?
Yeah, I'll be real vague about the details. So there's really two ways that can go down for a seller. You always feel pretty bad about these kinds of things. I mean,
course.
we all know it's going to happen someday to each of us, but it's still sad.
There's a lot of pain to the family members. There really is.
But I think everyone knows, especially the older you get, you should start making some plans for that inevitability, because there's an easy way that can go, and then there's a hard way that can go. The easy way is if you have done some estate planning, and you've it's usually in the form of like a living trust or a land trust or something like that. What you do there as a seller is you put your loved ones, all right, in a position where you're not going to be able to alleviate their grief, but you can alleviate a large part of the stress that they're going to have that just comes ancillary to losing a loved one. So if you own real estate and you just own it in your own separate name, you're going to end up in probate, and it's expensive, time consuming. Ask anyone that's ever been an administrator or an executor in probate how much fun it is, and the answer will be either 0 or less than 0 as far as the amount of fun. It's no bueno. So having a trust, and I won't get into the details of what that all means. I mean, you can certainly reach out, and I can connect you with an estate planning lawyer who can give you more details. But having a trust is going to be is going to make things way simpler for the people who are left after you go. So, in this instance, the client had done the appropriate estate planning, and it is going to be far simpler for that transaction. In fact, probably we don't have to change a thing other than who's going to sign the closing documents. Whereas if that was not the case, best case scenario is that we're able to kind of work some title magic through the title company, there's an extra cost associated with that to kind of avoid probate, or we got to open up an estate in probate, and you're going to be at least if everything happens perfect, 6 weeks from then being able to proceed on that transaction. And I would say I would probably plan for more like 3 months before you can get back to where you were at when that person passed away. So it's a really good idea. Even if you're like, well, do I really need to spend that money? Trust me, the money you spend on an estate plan is going to be a lot less than your next of kin ends up spending on a probate. So, pick your poison as far as which lawyer do you want to enrich. I would say enrich the estate planning lawyer. At the end of the day, it's going to be a better outcome for everyone involved, except for you. You'll be dead.
People are laughing at me because that is like my whole motivation right now is dying. All right. So yeah, I'm trying to do I know it's so morbid, but it makes me smile, It really does.
Okay?
It is okay. No, I have no permanent illness or anything else. I'm just at that age where I'm realizing, and I'm at the acceptance stage, that sooner or later I'm going to die, and I want to make my life worthwhile. And the people that I love, it's my family. They're number one. I'm sorry, all you listeners. You are second in line to my family, but you're still important to me. But I want to make sure that when I leave, I want to leave something that they're taking care of for the rest of their life. So everything with this estate planning and the home and the business, and, I got 15 guys that work for us. They need to make sure that this business keeps going. All right. So I have to have a succession plan. There's a whole bunch of stuff that needs to work out in here and keep it going. So it gets serious. And Joey, did I hear you say that you had somebody die that was a buyer in the middle of all this?
Ooh.
It was a suicide, and it just
oh, that's horrible.
Yeah. The transaction amicably canceled.
Yeah, well, I was going to say that's a good point.
How can you not cancel it?
Well, when one or all of the people on one side or the other of a transaction are no longer with us, that transaction is also no longer with us. So perhaps yet another reason why it's important to make those plans. I mean, I don't think anyone plans for the scenario that Joey just described. And if you're in the middle of buying a house, that plan superseded the original plan somehow, some way, unfortunately.
That's a shame.
But so in that scenario, nothing can happen except that the transaction is done. On the seller side, if the proper plans have been made and it's a trust that's selling, if provided that that's still the route that the folks who are now the trustees of that trust want to go.
Good point.
Everything is pretty seamless as far as the paperwork and the legal aspect of it. And not to diminish the actually unseamless aspect of losing a loved one.
No, that's all a good point that comes in there. Something else that was happening recently, I've been reviewing other people's reports for home inspection reports for, just when they're buying them, they don't know what it means. And some people are just making bad decisions that come in here. And I wouldn't mind getting your 2 cents on this for both of you. Is like we just had one person, I didn't see any pictures, I didn't know anything. They just said that there was a crack in the foundation, all right? And he said that the home inspector didn't think it was a big deal, but that's all I know. But there was water coming in. So, I'm thinking, okay, injected epoxy, and they wanted to get a guesstimate of how much it's going to be. And most home inspectors don't get pricing, all right? And the reason why they don't is because contractors are all over the board, all right? But there is an online service out there that's free, and it's called HomeWise. And, so I just do a simple Google search and, cost to repair a crack, and then I throw the word HomeWise in there. And usually what I found is that most of the smaller contractors like to use this because they don't know how to bid. They don't have big overhead. They don't do a lot of stuff, that comes in there, so they don't have a staff. So they kind of stick to the high prices of that. But when you get to the bigger companies where you see them on billboards, they have a huge sales marketing staff. Well, that costs more, so they have to charge more where it comes in there. So I just, said it's going to be somewhere around $500 to $1,000. And another home inspector piped up and he started going, you're reckless. You shouldn't be putting prices out there. You shouldn't be doing this stuff. And I'm like, all right, let's get the worst case scenario. And they're like, they should get a structural engineer out there and determine how bad this stuff really is. And before I give my 2 cents, I would love to hear your 2 cents.
I mean, if isn't that really the dogma or the company line that most home inspectors are given, at least at the beginning of their careers? Like,
Yeah.
So
Don't quote code, don't get prices, defer off to everybody else. I mean, that's so unhelpful.
Well, but it's easier and safer, right? So if you're looking for and I mean, look,
I'll agree with easier, but I won't agree with safer.
For the home inspector, it's absolutely safer. It's
I disagree.
absolutely safer because you will never get a call down the line that says, "Hey, you said this was going to cost $1,000 and it costs $10,000."
As much as I love you, Patrick, you're wrong. All right, these home inspection companies that do exactly that, they actually have to employ a full-time person to handle the amount of complaint calls that they get. And not only do they get complaint calls, then they're worried about their reputation, they're worried about lawsuits. If somebody comes in there with some serious money bags, they have to defend them. And a lot of these people have lost a lot of money going there. I want to give as much information. The more you go and you build that level of trust with your clients, I find the more thankful they are and the less they want to harm me. Even when things go wrong, they want to do the right thing. And I trust in humanity. I'm a nerd.
Well, I mean, I think that's probably something that's unique to the situation that you find yourself in. I can only sort of, I don't know, make some assumptions about the couple different situations you're talking about. I mean, I know by and large you personally handle a lot of the the things that come up dispute wise, and so you're a lot.
And I get 4 a year.
Well, and so, basically you're giving out this information and you're standing behind it. Whereas with some of these other companies, they're employing home inspectors more in the sense of a home inspector as a commodity, right? If they have a certain level of business, that just means hiring more persons with the credential home inspector. So, they're not as careful.
Are you trying to trigger me?
in their hiring as you are, right?
He is.
So you as careful?
No, not careful. That's a compliment, but it's just hire anybody, commodity, and I take great pride in our reputation.
Well, I would say that,
And I am not a commodity.
well, of course not. Of course not, Charlie. I know you hate that
the
word.
best.
He is something.
Now that's funny
Look,
and true.
everyone's entitled to set their business up the way they want, and if at the end of the day they review their books, their bookkeeper hands them all the accounting and financials at the end of the month, and things are going the way that they want them to go, and that involves sort of having a arm's length relationship with the clients. That's how they want to handle things. Now, as a consumer, not the best. And when someone goes, well, I really can't tell. Could be 25. Could be $25. Could be $25,000. Identifying something is, thank you. But I guess having someone on your side who's going to be more of a consultant than just sort of a pointer out of things, there's a lot more value to that. But the business of home inspection seems to be you're the outlier than
That's a good point.
As opposed to the ones who are basically doing it the way that everyone's been taught.
No, you're absolutely. Joey, what's your 2 cents?
Oh my God, are we still back to the structural engineer thing?
Yeah.
That was a lot. No, I mean, so I stay out of it until an appraisal comes up. Honestly, if an appraiser calls it out, then I deal with it. But until that point, that is going to be an attorney review item all day. Obviously, a structural defect is probably going to be the most costly problem you can close with, if you decide to close, and you can close because nothing comes up on the appraisal. But if it turns out that there was a problem, then protect yourself. I'm always going to say protect yourself. Period.
But how many times have you had an appraiser go back in there and say, oh, we can't write this because the foundation's so bad? All they do is ask for a structural certification, right?
One time, and it was in Evergreen Park, I want to say. I remember that house because I had never seen walls buckled in so hard. I couldn't believe that the house had not yet collapsed.
Wow.
That's interesting. Yeah. I've actually did an inspection like that one time, and I remember the husband, he just shrugged his shoulders at me. I'm like, no, it's bulging in a good 9 inches. I mean, it's really moved. The middle is pushed in 9 inches. It's visible here. He goes, yeah, my wife wants the house, is all he said to me. Well, no, that's not the end of the world. Everything can be fixed. All right. He was just willing. And that's, today's dollars, usually when it comes to stabilization, whether it's I-beams, carbon fiber, underpinning, you're looking at roughly about $1,000 to $2,000 for each one that they install. They have to install at least 2, and it's going to be every 5 feet, whatever covers the problem. So we can do the math, and we can add these things up in there. And injected epoxy is around $500 to $1,000. So everything it really does come down to the money. I hate to sound like a cheap jerk, but it really does come down to the money.
And that's what it costs here in the Chicago area.
True, good point.
There's some caveats to that. But, from Joey and I's perspective, neither of us is ever likely to see the home in person. So it's really crucial
That's another good point.
to have the inspector who's had their eyeballs on it to be able to have a conversation with you about, this is what I think. Can I guarantee any of what I'm saying? There is no such thing.
It's a guess.
It's not.
A lot of it is.
I'm not giving you insurance, but this is just what my gut tells me. And likewise, your real estate broker is going to also be someone who you should be able to rely on. How many homes will a real estate broker have been in? how many will actually have the capability of giving good advice is unfortunately.
Well, they just
Far
need to
too
have.
low.
You don't have to have all the answers. You just got to know who to talk to or how to get the answers. That's it.
Yeah.
It's okay to say I don't know.
Well, a lot of them
You
are
know?
going to go find the structural engineer. So they'll easily spend $1,000, $2,000 out of the buyer's pocket just so that they don't have anything that they have to
But then they're washing
account
their
for.
hands, and the only person suffering is the buyer. And we're running out of time, and I got about 7,000 more questions to ask you, Patrick.
Yeah.
But we need to close it up. Can you give us your contact info again?
On Instagram, Loftus_law. On TikTok, Loftus Law. Subscribe to me on YouTube. I put my shorts up all the time. Loftus Law.
Why are you giggling when you say shorts? Joey, please. Take it
Joey
serious
Matthews.
again.
The VA loan nerd. I have no shorts.
Oh,
You
God.
can call or text me at 630-235-2405. Hit me up on social medias as at the VA Loan Nerd, or find my webpage at thevaloannerd.com.
Tidy Whiteys.
That was okay. I'm not even going there. Charlie Belfontaine, Chicagoland Home Inspectors. Our phone number is 312-544-9180. Any questions about real estate? I don't care if it's for a mortgage person, an attorney, a real estate broker. We'll get you the answers. Just please reach out. Special thank you to Devin and Henry for making everything work so good.
Leopard print
And again,
thong.
my
Silky.
name is Charlie, and I am out, and I'm so sorry.